We live in an age of financial advice. Everywhere you look, somebody is explaining money. Investors explain investing. Entrepreneurs explain entrepreneurship. Billionaires explain success. Even people who became rich 6 months ago are already writing threads about wealth. And most of these stories follow the same structure. Take risks. Think differently. Ignore the crowd. Trust yourself. The implication is comforting. Success leaves clues. Study successful people long enough, and eventually you'll discover the formula. There is only one problem. The people giving the advice all have something in common. They survived. And survival, as it turns out, can be a surprisingly misleading teacher. Imagine a museum. Inside are the people we admire: Warren Buffett, Steve Jobs, Jeff Bezos, Mr. Beast, the founder who started in a garage, the investor who bought the right stock, the creator who somehow cracked the algorithm. Every industry builds its own museum, and every museum tells the same story. Here is the winner. Study them carefully. Maybe you'll become one too. It's a comforting idea, so we search for patterns. The billionaire drinks the same coffee every morning. Noted, the entrepreneur fired his first business partner. Significant, surely. The investor reads obituaries for fun. Now we're getting somewhere. We love success stories, partly because they're inspiring, partly because they're easier to understand than statistics. A story has a face, a story has a hero, a story has a lesson. Statistics have spreadsheets. And here's an interesting story about statistics. During the Second World War, the Allies examined returning bombers and noticed bullet holes concentrated in specific areas. The obvious conclusion was simple: reinforce those areas, add armor where the damage appears. Fortunately, a statistician named Abraham Wald pointed out something strange. They were studying only the planes that came back. The planes that didn't return were missing from the data set. The bullet holes weren't showing where the aircraft was vulnerable. They were showing where aircraft could survive being hit. The real damage was invisible. The evidence was sitting at the bottom of the ocean. Financial success works in a surprisingly similar way. We study the planes that came back. Because for every financial success story, there is something we almost never see. The graveyard, a vast landscape filled with failed businesses, failed investments, failed predictions, failed attempts to become rich. Consider the numbers. 90% of startups fail. That figure hasn't moved in decades. But here's the detail nobody mentions. The founders who eventually succeeded rarely got there on the first attempt. Max Levchin founded PayPal on his 5th try. Evan Williams built Twitter after 2 failed companies. The book gets written about the attempt that worked. The ones that didn't are in the graveyard. Now consider YouTube. At this moment, 90% of all channels on this platform have fewer than 1,000 subscribers. 97% have fewer than 10,000. And 88% of all videos ever uploaded to YouTube never reached 1,000 views. Not 1,000 subscribers. 1,000 views. You know the channels that made it. You can name them. You have never heard of the ones that didn't. But what about trading? A study tracking futures traders over 300 days found that 97% of them lost money. Not most, not the majority, 97%. 80% of all-day traders quit within 2 years. After 5 years, only 7% remain. And the ones who survived, they're selling courses now. The winner becomes visible, the loser becomes data. And once enough time passes, the winner's story begins to transform. The risk becomes courage, the gamble becomes vision. Luck becomes strategy. Not because anyone is lying, because hindsight is one of the most powerful storytelling tools ever invented. Nassim Taleb famously wrote that the most valuable part of Umberto Eco's vast library wasn't the books he had read, It was the books he hadn't. The unread books were reminders of how much remained unknown. In finance, the unread books are the failed stories, the businesses that collapsed, the investors who were wrong, the brilliant ideas that never worked. The problem is that nobody builds museums for those. And this is where it stops being a problem with the data and becomes a problem with the story. Because when someone wins, the market moves fast. The interview request arrives. The book deal follows. The course goes live. And all of it requires the same thing, a coherent narrative, not I was in the right place at the right time, not the cycle happened to reward my particular bet. Something cleaner than that, something that can be packaged, so the story gets edited, not out of vanity, not out of dishonesty, but because the market pays for clarity and punishes ambiguity. Uncertainty doesn't sell, humility doesn't scale, and the survivor, consciously or not, begins to remove the parts that don't fit. The luck becomes foresight. The panic becomes a test they passed. The moment they almost quit becomes the turning point that defined them. And here's the uncomfortable part. The brain does exactly the same thing, even without a publisher. We all rewrite the past in retrospect. We all remember our decisions as more deliberate than they were. We all quietly edit out the moments where everything could have gone the other way. The market wants a hero. Memory builds a hero. And somewhere between the two, the role of chance disappears entirely. There is nothing wrong with wanting to live like a billionaire. The problem is that wanting something badly enough makes the instruction manual look more reliable than it is. When desire is strong enough, testimony starts to feel like proof. And that's exactly when the graveyard becomes most invisible. So the next time somebody hands you a framework built from their own success, don't dismiss it. But don't mistake it for a map either. What you're holding is a testimony. A single data point from a universe of outcomes that never got to speak. The winner's advice isn't wrong because they succeeded. It's incomplete because everyone else disappeared. Every strategy that worked did so inside a specific moment, a specific market, a specific sequence of events that may never repeat. The survivor can't tell you that, not because they're dishonest, because they were only inside one version of the story. The graveyard holds all the others. This doesn't mean paralysis, it means calibration. Before you follow the advice, find the base rate. Before you trust the framework, find the failure rate. Before you adopt the philosophy, ask how many people ran the same experiment and never came back to report the results. The museum is real. The graveyard is real. The only question is which one you're using to navigate.